Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 6th, 2023. More significantly, it is a full moon. It's the first full moon of 2023. That is significant, and we're going to get to that in just a moment. But first, I think the really cool thing that's happened on in the charts is this. If you haven't been paying attention, the US dollar is crashing, okay? Yesterday's show was about how the US dollar was likely collapsing and about to enter an impulsive move down, okay? And this is precisely what we're seeing on the charts right now. As you can see on the 4-hourly time frame, our rejection from resistance, okay? We said that the top of this range was resistance, staunch resistance for the DXY, because this, if you zoom out, you go on the daily time frame, you can see very clearly that this level is the support level of an almost 200-day pattern, okay? This head and shoulders pattern. And you're essentially now, you just hit your head up against a 200-day level, okay? That's not something that you're necessarily going to break with any ease. So exactly what happened there is a big rejection that we had this morning, and that we're continuing down on, okay? So what I was saying yesterday, in yesterday's live stream, was that we were likely to see a continuation of this impulse, right? It's a continuation of the impulse. The dollar has been collapsing. It's nothing new. The trend has been impulsive and down, and it was likely to continue. Very many ways to look at this, okay? You can look at it like inverse head and shoulders breakdown, as I've been discussing, okay? And the target is going to be the height of that head and shoulders superimposed from the site of breakout, right? Or you can also look at it like this, right? A rising wedge breaks down. The height of that rising wedge is likely to be your target, right? So there's a lot of ways to look at that, because for a lot of pattern traders, this was confirmed. This breakdown of the DXY was confirmed right there upon breaking the lower support of that rising wedge. Do you see? So a lot of ways you can look at this. In essence, the dollar's bearish. This bodes well for Bitcoin and risk-on assets. As you can see, the stock markets are responding favorably to this to the dollar's sort of drawdown, and Bitcoin as well as cryptocurrencies are on the verge of doing so. Okay, I say on the verge because we have yet to see a massive move in Bitcoin. But if we were to see a massive move in Bitcoin, it would be coincident with the beginning of this move, a loss of support, right? We've been holding support here in the DXY for a decent amount of time, since late November, okay? If we were to see a big move in Bitcoin, I presume that it would be coincident with a loss of this support. So the DXY coming below this level right here, all right? So that is a really big deal. It's happening. And I expect it to continue to the downside, just as we expected, right? And I also updated this pattern right here from a 3-3 to a 3-3. So I have this as a WXYXZ. Okay, I think that makes more sense, because we came up a little higher than I expected, and there's no way that this is a part of a consolidation reversal. It's just you broke the phi ratio of this move right here. So the only way it makes sense is it's a triple three. Anyway, that's getting into the weeds. All right, now let's get into Bitcoin. All right, what did I say on the thumbnail? The thumbnail said that this pattern was likely to be a breakout pattern for Bitcoin. I said Bitcoin was likely to break out of this pattern, okay? Few reasons why I said that. If you follow this work, you understand that I've been bullish mainly because our main indicator, the DXY, has been bearish, okay? And if the DXY is on the verge of collapse, then Bitcoin and cryptos are on the verge of impulse to the upside, okay? That's basically my main thesis. It's been my main thesis for quite some time. How else do you make a $400 billion market cap asset class move impulsively one way or another? Either somebody's injecting billions and billions of dollars at any given moment, or the underlying asset, right? The dollar, which is the underlying asset for Bitcoin and most cryptos, changes, fluctuates in value, right? So that's one of the reasons. The second reason is just looking at the Bitcoin chart. Okay, what do we see here? We see that ever since, let's zoom out here. Now, pay attention to this blue rectangle. It's our support level, okay? And why is it our support level? I want to give you the whys. I don't want you to take my word for it, okay? If you look, you see that this is clearly support for this reason, right? You have your inverse head and shoulders. That's your resistance. You broke it, broke out. You came back down. You're basically retesting old resistance as new support, okay? And so this represents old resistance that is now new support. That's why the blue box or the blue rectangle has been drawn in, okay? So this blue rectangle has served not only as support, but what support? It's essentially supply, liquidity, okay? So it's liquidity where the price comes in, it gathers liquidity, moves out. Gathers liquidity, moves out. We call that a double bottom in the business, okay? Double bottom. And from that double bottom, you have a pattern, okay? So we're going to now focus on the pattern that you get from the double bottom, okay? So I believe that the first pattern that you get out of that double bottom is a corrective pattern. It's a zigzag. It's not an impulsive pattern. Why is it not impulsive? Because waves of the same degree are comparable in time and in price. This 5-wave sequence and this 3-wave retracement are not comparable in time. Not at all. Not even close. Okay? So for me, that is corrective, and that's fine. But once we get here, I start counting impulsive waves. But how do you count this impulsively? Okay, if it's a 5-wave, 3-wave, 5-wave, 3-wave, we all know in a regular 5-3-5-3-5 advance, right? When we're talking Elliott wave theory and you're looking at 5-3-5-3-5 impulses, 5 waves up, 3 waves down, 5 waves up, 3 waves down. This first 5-wave sequence and this next 3-wave sequence can be measured and yield a 3-wave or a 5-wave move. So wave 3, that's typically between 1618 and 2 Fibonacci extensions of wave 1, retracement of wave 2. Okay? So that's what we intend to get. That's what we expect to get. That's what we usually get. But when you do that here, right? Let's say you took this as wave 1 and you took this as wave 2. You don't hit the 1618. Okay? You see the 1618 is between 17,068 and 17,178 on this chart. You're nowhere close. Rather, your wave 3 actually comes up to about the 1 Fibonacci extension, which is the minimum extension of a wave 3. Okay? So, okay, that's happening. What else? Second thing is, let's first assume that this is a legitimate wave 1, wave 2 situation. Okay? So we take the time. I don't know, what would we say? 1 day, 10 hours for wave 1. And then this purported wave 2 would be something like 1 day, 6 hours. Yeah. So wave 1 and wave 2 are comparable in time. They're comparable in price. Why are they comparable in price? Very simply, you can do it, just by eyeballing it. The wave 2 retracement clearly comes between the 382 and the 618 of wave 1. Okay, you can see that wave 2 here comes right down to the 0.5 Fibonacci retracement level. Okay, so this is exactly where you intend or expect to see wave 2. Okay, so our wave 1, wave 2 is okay. Now wave 3 is a little shallow, as we saw. But when do you get a shallow wave 3? This is in what we call a leading diagonal. Okay, in a leading diagonal, wave 3 tends to extend to the minimum wave 3 extension. And the minimum wave 3 extension, you don't see it every day, but it's the 1 Fibonacci extension. Meaning, wave 3 cannot be any shorter than wave 1, because we know in Elliott wave theory, wave 3 can never be the shortest Elliott waves of the impulsive Elliott waves. It doesn't have to be the longest, but it can never be the shortest. As a result, wave 3 cannot be any shorter than wave 1. And in this example, you see wave 1 and wave 3 are approximately the same size. I would say wave 3 is like this, right? Approximately the same size. We already measured it, okay? So if you get a wave 1 and wave 3, so wave 1 and wave 2 are comparable in time and in price. So that gives us credence. That gives credence to our thesis that this is likely, probably, an impulse. Wave 3s hit the minimum extension, okay, of the 1 Fibonacci extension of wave 1, retracement of wave 2. So that makes all of this wave 4, okay? And in a leading diagonal, why do they call it a leading diagonal? It's because you can typically channel the price action in a diagonal wedge. Yeah, sometimes it's a straight wedge like this, right? Sometimes it is a diagonal wedge like we have here, okay? But that's what we're seeing. That's what I'm seeing. That's my count. This is why, after looking at the price action, I'm like, oh, this is impulsive, but it's a leading diagonal. It's not a regular 5-3-5-3-5. Furthermore, when do you typically get these leading diagonals? You don't get them every day. You get them when price is changing trend from accumulation to a new sort of expanded trend, right? How do I say this? You get them when price is changing trend, and there's a lot of accumulation that you're waiting out of. Do you understand? So basically, if you just look at these ranges, it's very busy. There's a lot of buying and selling done. It's not easy for the price to just put in a casual, 5-3-5-3-5 advance. So it's basically going to trudge up, right? Absorbing all these sell and buy orders until it gains some breathing room after it leaves the range of accumulated orders, the range of, accumulation or distribution, whatever, accumulation, right, in this case, that it's been in. I hope that makes sense. So you see these leading diagonals at the start of big changes of trend. Okay, so this also fits into the idea, the thesis, that this is likely a leading diagonal. Okay, so we have the indicator, the massive, DXY indicator that's telling us, okay, we're likely to get a big move up. Then we look at the price action and we see a leading diagonal. We measure waves 1, wave 2, our purported wave 1, wave 2, and wave 3, and retracement of wave 4. Everything fits. It fits in a diagonal quite nicely. So again, this is why I said, or this is why I think that the next big move is up. Now, where do we go from here? Okay, leading diagonals, if you look at the literature, they tend to extend to a minimum of waves 1 through 3, retracement of wave 4, the phi extension. So it takes waves 1 through 3, retracement of wave 4, and measure the 1618 to a minimum. Okay, so that would be a minimum target of 17,530 for Bitcoin on this chart. Okay, now where do I think we're going? I think if you zoom out, I think it's quite clear our minimum extension needs to be the top of this range right here. Okay, minimum. So I think, if anything, if this is indeed a bullish pattern, excuse me, and the start of the bull run, actually I think we break this, retest it, and continue. Okay, so this is what I'm seeing. Like, it is obviously a big move, relatively speaking, given what we've been experiencing up until this point, right? So nobody's used to big moves, but actually, you know, in the context of a bull run, that's not that big a move. That's just like a 15-16% move. Okay, I think to get started, you can expect something like that from Bitcoin. All right, for those reasons. So that's my Bitcoin take. That's why. Okay, there's another part to this analysis. Okay, I mentioned in the beginning of the video that today was January 6th, but more importantly, or more significantly, it's a full moon. Okay, why do I mention that? I know not a lot of people think technical analysis is BS, and even more people think that astrology is BS, right? But I'm not talking about people's beliefs and even your belief. I want to talk about data. I think that's what's most important. When we look at the DXY, for instance, and we put so much emphasis on it as a main indicator, an inverse indicator for Bitcoin's price action, we do that because of the data. You know, we have 11 or 12 years of that data to go off of, okay? When you look at how markets behave in a full moon or in a new moon, okay, with the lunar cycles, we also have data, okay? And I welcome you to do your own research. As I always say on this channel, it's not about listening to anybody else. You can take ideas from people, you can be inspired by people, but at the end of the day, you're never going to trade anything that's not yours. Okay, you're not going to put your money, you're not going to risk something that you don't have conviction in. And to gain conviction, you have to do your own research. Okay, so I just want to show you something. This is a lunatic trader. This is a blog run by a group of traders, or a trader, I don't know, who research this phenomenon, the phenomenon of moon cycles in markets. And here, let's just read this summary real quick. Based off of research of the stock market data, based on research of stock market data since 1950, okay, that's approximately 73 years of data. We have identified a lunar green period when stocks tend to do better than average, and a lunar red period when stocks generally underperform. Green periods start about 3 days after the full moon. Actually, technically, if you look at this data and you read more into this, we're not going to do it together, but feel free to do this on your own time. If you look at the different studies, it's 0 to 3 days after a full moon. So basically, the day of the full moon, you can get that lunar green price action, and up to 3 days after, on average. And then the red periods begin about 3 days after the new moon, and same here, 0 to 3 days after the new moon. The outperformance in green periods is significant, as you can see in this chart, 1950 to 2009. So the data that this is all based off of is, I guess, 59 years of data, okay? 1950 to 2009. And so you can see quite clearly that essentially what this means is that in markets, the green periods or full moons represent market bottoms. And so, pursuant following a full moon, 0 to 3 days after a full moon, you can expect growth in the stock price, in the asset price, okay? And the opposite is true for new moons, okay? So that there's statistical significance to the claim that full moons and new moons affect price action in stocks, equities, and so forth, okay? So that, I think, is interesting and is another reason why I think it's a good idea to be bullish at this point, okay? So, again, just to recap, we have the DXY plummeting, okay? The DXY is losing support, okay? And it looks like it started an impulsive move down, or it how would you say? It resumed, that's the word I'm looking for. It resumed its impulsive move down, okay? So that's the trend. This is the trend resuming, okay? So that's the first bit. The second piece of data, okay, anytime you make a thesis, I think, or at least anytime I make a thesis, I have various points, various things that I use to buttress or to support my claim, my thesis, right? And the more data points, the more things that I have that are convincing, then the more bought into that thesis, I am. So then we have the price action. We have the likely leading diagonal. Okay, so that's 2. And then finally, we have the moon cycle. Okay, today, January 6th, is actually the first full moon of 2023. So 0 to 3 days from now, we should expect a lunar green period, statistically speaking, market outperformance, okay? And so, I mean, I don't make the rules, but just have a glance at what traditional stocks are doing right now, yeah? As you can see, the SPX is green today, okay? And it looks like it's just coming out of a period of consolidation, right? Looks like it went up, came down, retracement, consolidation. Looks like it's about to break out, okay? So all of these things are really encouraging, right? When you're looking at moon cycles, you're like, oh, today just so happens to be the full moon, okay? And so now the SPX is moving. Now Bitcoin's about to move. Now the DXY is dumping. All of these things, right, are why I'm really bullish on Bitcoin right now for the move that we've been waiting for, okay? So that's pretty much it for Bitcoin and why I'm bullish. And that's my case, okay? Now, let's use the rest of the time, as usual, to take questions and to go into altcoins and to see, excuse me, to see what the rest of the market is doing, okay? So Ethereum, also quite bullish. I would say that Ethereum is putting in a more traditional 53535 wave advance, okay? As you can see here, this is likely some sort of 1, 2, 3, 4, 5, okay? Looking for wave 5. Both Bitcoin and Ethereum, in my estimation, are about to print wave 5, but you can see that 1, 2, 3, 4, right? Something like that. So that's what I'm seeing on Ethereum. Litecoin. I see something similar. Litecoin's a little tricky because I'm not sure what to make of this, and I've brought this up before. Is this corrective or is this impulsive? Is this a zigzag or is this you know, I don't think it's a regular 535. I don't think it's wave 1 and 2, just because the time doesn't work out really well. 2 days and 12 hours for the impulse up. 2 days and 12 hours. 6 days. Did I say 2 days? 6 days and 12 hours for the way up. 2 days and 12 hours for the wave down. It's got to be a corrective. Okay, and that's kind of something that I floated the other day. If that's the case, then Litecoin's maybe looking at this as wave 1, wave 2. Let's see. So for that to be wave 1, wave 2, you would have to hit a minimum retracement of 0.382, okay? And we just barely did, okay? Because wave 2 has to retrace to the minimum of 382, maximum of 0.618, okay? Balance of probability. Okay, so we have that. That's comparability in price. Now let's look at the time factor. Okay, saying it starts from here. 2 days, 16 hours on the way up. Four days and 4 hours on the way down. I don't know. I'm not exactly sure, to be honest. I don't really know what's going on here. Maybe it's a wave 1, wave 2 situation down here, and this is wave 3, wave 4. You know, wave 4 goes to, on average, between 236 and 382 Fibonacci retracement level. I don't know. I'm a big fan of I don't know, but something I think we can agree on is that this is an uptrend, okay? Even though we're not exactly sure how to dissect it, you know, the anatomy of this uptrend, it is an uptrend. It does help to know more information, because then you can kind of track it and say where it's likely to end. But for now, I think this is quite bullish. It's quite bullish. Also, on a higher time frame, if you just look at all of this, actually, let me draw it like this. Sorry. Okay, if you just look at all of this, let's try that again. That's better. As some sort of inverse head and shoulders, right? A breakout, retest, that could be what you're looking at on a higher time frame, okay? I don't know, but that's a possibility. That's a possibility. And actually, to be more precise, perhaps your neckline is lower, right? Something like this. Something like this. Perhaps. I don't know. It's a possibility, yeah? Oh, no. Right? Basically, whatever this is, you broke that resistance right here. You retested it, and now you're gone. Okay? Question is, are you going to retest it once more, or just going to go from here? I don't know. But yeah, that's what I have for Litecoin. Little hard to tell when you're just establishing a new trend. It's sometimes a bit ambiguous. Okay, I think that's what we're dealing with here, that ambiguity. This is Algorand. It's looking really good. Obviously, on the high time frame, it's just been a bloodbath to the downside. But here is looking very promising for recovery, okay? Very promising for recovery. You got all the way up to this level, very crucial level here, okay? And you're not rejecting. I don't like that word here. You do some consolidation, okay? as you should expect on any impulsive move. So this consolidation seems to be going just right because it looks like it's going to resume its move. Okay, so that's what I see with Algorand. That's quite bullish. Okay. Dodo. Kind of same thing as Algorand. Not necessarily like the same thing, but you went up, you consolidated, you held the 0618 of this uptrend. Okay, so that's bullish. And now you're continuing, it looks like. That's quite bullish. I would expect if we did continue here and we broke this, yeah. Okay, you get what I'm talking about. If we broke this, I expect a huge move. Okay. Same thing here in Dogecoin. Okay, if we're going to continue this, I do expect a big move, kind of like this, right? There's always balance in the market, okay? If you come down this violently on this side, right, very little chance for any buyers to step in. It's all sellers, right? That's an imbalanced, there's a lot of imbalance in the market, in the chart, okay? Do expect that to be balanced out here. And you can see it's like very balanced, actually. You have all of these moves, this consolidation reversal pattern, that shows quite a lot of balance. Some people are probably saying, ooh, I see a head and shoulders pattern. Remember, head and shoulders, inverse head and shoulders are reversal patterns. They're not always going to break out in the way you think they're going to break out. What confirms them is a break of the neckline, a retest, and then a breakdown, okay? So until you get that break of the neckline, a retest, and a breakdown, they're not confirmed, and you should just look at any head and shoulders or inverse head and shoulders as reversal patterns, okay? And in this case, if we want to be more technically precise, instead of seeing an inverse head or a head and shoulders pattern, you would see 2 degrees of AB basing and a pivot, right? That's 1 degree. That's 2 degrees. That's your pivot. And this is your leading diagonal up. That's how I see it. I understand, though, if you would say, hey, I see head and shoulders. I think if you look at it enough, and you're looking at head and or you're looking enough at AB bases, it's easier to distinguish an AB base from a head and shoulders. Okay, or an inverse head and shoulders. Same thing with reserve rights, right? Kind of like what we saw on Algorand. Big move down. Reclamation of an important level. Consolidation. Looks like a move back up. Excuse me. This would be confirmation of the reversal right here. You're essentially putting in an inverse head and shoulders. And confirmation, once more, would be a move up, breaking that neckline, retesting the resistance as support, and then breaking out. Okay, synthetics is a great example. Again, same thing. You came down, you came back up, reclaimed this level, consolidated. A confirmation of the reversal is a break of this neckline right here. And that's excuse me, that's essentially an inverse head and shoulders, right? Looks promising. Looks promising for continuation. You know, on the 4-hourly time frame, your momentum indicators all the way oversold, and you're threatening to break resistance. So that looks really promising. dent, same thing. You put in this, it's not the same thing, but the same concept. You put in a corrective move, counter corrective move, 2 degrees of AB basing, and you can see the symmetry of this AB base move. You're looking for now that move to balance that out back. So it looks promising for a move up. SHIB. This is corrective to me, and it looks to me like this is a slanted 2 degrees of AB base and a pivot. Okay, from here I look at this as being a massive consolidation reversal pattern. Massive. I don't know if you guys see this, but it starts over here as my first degree. This is my second degree right here. And all of this is my pivot. And this is the last bit of my pivot right here. Do you see that? There's a flat correction that's slanted. So it's a bullish flat correction. That flat correction is a counter to this A wave right here. Okay? Do you see that? 1, 2, 3. So I'm seeing a bullish breakout from these corrective patterns. So that's SHIB. Cardano, looks like you're quite bullish because you broke this neckline. Okay, that was your resistance. Okay, you look at this channel. This is the resistance. You broke the resistance. You retested it as support. Now you continue and you matriculate your way up. That's what I'm seeing there. I think it's quite bullish. It's just matriculating its way up, and it's right now, you know, choppy, but it's choppy in a bullish, impulsive way, impulsively bullish way. XRP is interesting, okay? You made new lows with this move, but ever since, what you did was you came back up, reclaimed an important level, very important level. This level right here. Yeah, let's zoom in. XRP did something interesting and actually got back in. I remember telling you guys that I had gotten stopped out of my XRP trade with this new low. But then, and I didn't know how to get back in because, you know, this was a big move. This was a double-digit move. And so I was expecting if this was a corrective wave, the counter-corrective wave to have so much variance, it was going to be hard to trade because I'm buying on leverage, right? So what I did was wait. I just waited. And I waited until this was clear. And what came out was this pattern, a 3-wave move that completed. And so if you look at whatever this is, it's impulsive, right? Whatever this is, it's corrective. The fact that this 3-wave corrective move did not come down to even close to the 0.5 or the 618, you can conclude quite safely that this is pure impulse, because, you know, it's ambiguous when the corrective move comes to between the 0.5 and the 618, because zigzags come to between the 0.5 and the 618. But this didn't even come close to the 0.5 and the 618, and it made basically it reclaimed a level showing its bullishness, right? This was previous resistance, or sorry, it was it was previous resistance because it had been support. This was an important level, right? On the way down. An important level of support, lost, reclaimed, turned into an important level of support, lost, turned into resistance, now turned back into support. That is very bullish, came down, and now back up, okay? So the idea is that you're basically reclaiming a level, you're showing the change in trend. That's the story that I'm reading when I look at this chart on the small time frame. So once I saw this, I thought, okay, I know that with a high degree of probability, XRP is continuing to the upside. So I got in around this level on leverage, okay? So yeah, XRP is looking good for continuation to the upside, okay? And back to Bitcoin, guys. That's pretty much it. Let's see. Any questions? No questions. Last thing we can do before we leave is have a quick look at our general watch list, but do expect this to break out. I think high degree of probability you're gonna get a breakout here. Okay, and again, because this is a leading diagonal, this breakout should be quite large, right? Because now you're finally breaking or leaving these levels that are wrought with orders, right? There's so many orders. Whatever you're doing in this range, it's going to be slow and tedious, right? You can only start to experience really clear, unimpeded growth once you leave this range. Just like here, you see, you get into clear, unimpeded price action. That's what we're looking for. That's what we expect. Once we get above this level, do expect a quick move up. Okay, now let's quickly look at what else is happening in the larger market, in the larger cryptocurrency market. Okay, so you do have some big movers, not that many, but you have, you have convergence that had previously already run. Okay, this was something that we'd seen moved like 600-700%, so we're not so surprised that this is up by a bit. Ethereum Classic up 8%, EWT up 5%, Synthetics up 5%, that's one of ours. Polis DYDX up 3%, Zcash. By and large, things are on the verge of breaking out. Anchor on the verge of breaking out. Not yet broken out though. So I would not be surprised if we did get some breakouts. All right, guys, that's it for me. It's Friday, so there is going to be a video tomorrow, but it's going to be one of those premiere videos, not a live stream. Okay, but I wish you a happy weekend. Take care. Hope you're well. Hope you're well positioned to take advantage of these big moves. Remember, patience is key, but you don't get patience out of nothing. You need to you need to develop patience from perspective. Okay, you have to have the perspective and the insight to know that, okay, it's worth being patient. And then you're patient. You don't become patient out of nothing, right? Nobody's a masochist. So if you have the insight and you develop the skills to be able to read these markets and you can see the higher time frame moves, you can be patient for, when they eventually play out. And then when they play out, great, So that's pretty much it. All right, take care.